Welcome back. You're still watching Markets Today on CNBC TV 18. Today was a good day of trade for the markets. The Nifty ended with gains of almost 0.7%. The two pillars of the market today were technology and banking stocks. So big gains seen in names like Tech Mahindra, HCL Tech, HDFC Bank and SBI. But time now for some technical perspective. Sudarshan Sukhani is here with us. Sudarshan, the Nifty conquered that 8,400 mark today with quite a bit of ease. Would you expect this trend to continue into tomorrow?
Good evening. Well, markets had a good day today, and the range was narrow, but the message is that there was a breakout from 8,300, and that breakout is holding. So far as that breakout holds, the Nifty is in some kind of an uptrend, and we should be staying on the long side of the market. As sector rotation goes, some sectors will do well and then some others will take over. Today IT and banks have done well. Perhaps tomorrow that could continue, and by Friday maybe cement, maybe FMCG could now then come in place. That is normal and that will keep on happening. But it does appear that the Nifty could slowly inch its way upward. It may not be spectacular, but I would expect the Nifty to slowly move up and perhaps by settlement time may even reach 8,500.
Okay, what about individual stocks, Sudarshan? Give us an idea for tomorrow.
For tomorrow, I would suggest buying ACC. Cement stocks have come out of a deep correction and are now showing signs of some vigor. ACC is in a trading range and is on the verge of a breakout above it, and that breakout should then give us strong momentum for more rallies. So, as usual, keep your stop loss, but consider buying ACC, which is part of the cement sector. The sector itself is doing rather well.
Okay, Sudarshan, thanks for those ideas. Well, it has been an extremely volatile phase for the markets. Vikas Khemani, the CEO of Edelweiss Securities, believes that the market is in a consolidation phase and this is the best time to accumulate stocks. Take a look.
Currently, I think we are in a consolidation phase. As you know, the quarterly earnings seasons are more or less getting over, while there has not been many disappointment, but I think it has been muted earnings season. And I think from a real growth pickup perspective, we are still some time away. And also we are in the middle of a few international events, local events in terms of RBI rate policy in next month. So I think, you right now are sort of having any strong trigger from a growth perspective, and there are quite a bit uncertainty around in the environment. So in this phase, it is sort of natural for market to consolidate. We are in a very good, nice macro setup from a medium-term to long-term perspective, and I think that provides the protection to the downside, and long-only funds sort of come and provide that support, both domestic as well as international funds. So I think that's where we see base getting formed around 8,000 levels, and probably if it goes another 5-7% from here, you might see somewhat selling pressure coming. So I think we will be in a nice range for some time, till the time again the faith builds up around the pickup in the growth of the economy and on the corporate sales and earnings.
Okay, Tata Steel has also come out with their earnings today. Nigel is here with us to walk us through how the numbers look. Nigel?
Well, Tata Steel's numbers were always expected to be a disappointing set, but they seem to have missed even those low expectations. So just going through the standalone numbers, on the top line there was a cut of close to around 12%, but take a look at the operating profit. That took a hit of close to around 60%. The operating margins as well came to around 16%. That's close to have halved if you just compare it on a year-on-year basis. So with the top line falling 12%, the total expenditure jumped up close to around 12%. That's what led to the big miss on the operating profit. Now, a poor operational performance along with the higher finance cost hit the profitability, and that's why the standalone profitability came in lower by close to around 60%. Moving to the consolidated numbers then, we were estimating a number of around 34,000 on the top line. That came in at around 33,660 approximately. So that was roughly around a 1% miss on the top line. But take a look at the operating profit now. That was a big miss, because when your top line is down by nearly 20%, but your expenditure is down by only around 14%, that's what led to the big miss over there. So the operating profit took a hit of close to around 70%. And you take a look at the margins, the consolidated margins have come in sub 5%. We were estimating a number of closer towards 9% approximately. Now just pull up the consolidated operating profit. You'll see that came in at around 1,540 crores. But the standalone operating profit profit was in fact higher, telling you that the international operations were a very, very big disappointment. As expected, the company though has delivered a net loss. That's because of that big impairment cost that came under the exceptional items.
Thanks, Nigel, for that. But a number of other companies also reported their quarterly numbers today. So let's go across to Mangalam for a quick wrap. Mangalam.
Thanks a lot for that. A number of stocks were buzzing in trade today on the back of earnings. Among a couple of stocks that were reacting to earnings that came in yesterday post-market, we have Dolphin Offshore that was down 11% in trade today, as the total income for that one came in lower by 64% year-on-year, while the net loss also widened from 11 crore last year to 27 crore this year. But Jamna Auto, on the other hand, posted a strong set of numbers. The stock ended higher by nearly 10% in trade today after the revenues grew by 40% year-on-year, while the margins also increased by 370 basis points. But a couple of stocks that were reacting to their earnings for a second straight day in a row. In fact, Axis Cades lost about 5%, locked in lower circuit for the second straight day, while Indorama Synthetics gained about 18% in trade today on the back of strong earnings that they posted a couple of days back. But among the earnings that came in today, GOG BNP Paribas gained in trade today as their consolidated total income came in higher by 46%, while the net profit also came in at 17.2 crore versus a loss of 11.3 crore. A turnaround story perhaps, that one. But Bajaj Finance ended mildly flat in trade today after the numbers came in line, mildly positive. In fact, net interest income came in higher by 28%, while the asset quality, both GNPLs and net NPLs, remained stable quarter on quarter. But ahead of earnings, we were watching Voltam Transformers, which gained in trade today. Even Whirlpool gained in trade today, but Bajaj Auto, which reports their fourth quarter numbers tomorrow, lost about 2.5% in trade today. With that, back to you.
Thanks so much for that, Mangalam. And now let's find out which stocks brokerages are recommending. Agam, over to you.
Right, so in terms of houses we have today, first up we have HSBC on Hathway Cable, and they have reiterated the buy with a price target of 76, and they're of the opinion that not only are the investor concerns overdone, but we're also looking at positive ARPU improvement in the medium term, on the back of which they also put their CAGR of 16% over the period of FY15 through FY18, because of which they're also positive on Hathway Cables. Moving on, we also have Ambit on Pidilite. Now, do remember, Pidilite has come out with a weak set of numbers, and Ambit is of the opinion that there is over-optimism which has been into the input costs, and that the tailwinds that the input costs provide will only be for another 1 or 2 quarters more. There's also a lot of uncertainty when it comes to the elastomer projects, and as well as rising competition from Berger's and Asian Paints coming in as far as its construction chemicals business is concerned, because of which Ambit has put reiterated itself at the price target of 390. And finally, we have CLSA on Persistent Systems, where they've initiated a coverage on this particular counter with a buy rating, and they've also put the price target around 1,000 rupees per share, where and this is of course on the back of the closest digital pure play as far as Persistent System goes, because and that's also the reason why CLSA is very positive on this particular counter, and that's what we have in terms of some of the brokerage costs that we have coming in today.
Thanks, Agam, for that. Now let's hear out some top trading ideas from Sahil Kapoor of Edelweiss Financial Services.
Yes, if you look at Amara Raja, last 5 months, it's been absolutely in a range. It's forming a pattern which is flag pattern. Generally, the stocks which outperform index significantly, generally, when they go into consolidation, they generally, carry that consolidation forward in terms of a range. So I think this range has already given 5 legs. So generally corrections either happen in 5 legs or in 7 legs. So we believe that this correction is largely over, and current level is an excellent entry point with a stop loss below 780. I think a 1,000 rupee target is likely on Amara Raja. Yes Bank, if you look at, it's been outperforming most of the banks on the bank Nifty as well. There is a clear rectangle pattern. Rectangle patterns are very rare on charts. If you look at a very large number of price bottoms in Indian indices, in early part of 2008 and 9 were formed through rectangles, and this is a pattern which rarely fails. A breakout of 860, 865 range, I think Yes Bank is headed toward 1,000 rupees. So it's a purely pattern-based trading setup on Yes Bank. Stop loss below 800 to 790 should suffice, and it should head towards 1,000 rupees.
Okay, so those are some trading ideas that you can work with for trade tomorrow. With that, it's a wrap on this edition of Markets Today. But we leave you with these images of French car maker Renault's new compact hatchback Kwid that was launched in Chennai today. This car is, or rather this hatchback is priced between 3 to 4 lakh rupees, and the Kwid will be produced at the Nissan Renault plant at Orgadam in Chennai. It will give a tough fight to a lot of other small cars like the Alto, the Eon, etc. So this is the latest kid in town. With that, it's a wrap on this edition of Markets Today.